Hello, good morning. Welcome to another ES Futures trading stream. Today is Thursday, May 16th. It is 9:08 a.m. 9:08 a.m. This is Easter time in the US. Uh, the market is making new highs. The market, before, as usual, the first thing before doing anything is check our monthly, weekly, and daily time frames. And we see the market this market hazard is the rally that we have here has taken this previous year high out, right? This is 2023, right? And right here you have 2022, which was the high of 20, pretty much the high 2021 as well. Lots of volatility, and then an impressive rally that started in October, November last year. Now, we do have a range here. We have a 3-month range, and we don't have excess here at the high. That's for once. One time frame lower has ended here. Markets really go from rally to break. Seldom do that. Usually we do have a rally or break and then range and then rally or break that follows. This is the weekly. We do have excess now in the weekly, but it's not the good. I consider this not to be a good excess high for once, but it is excess anyways. It is excess. We do have excess. Right, these highs are being taken. A good excess, an example of good excess, is what this market, the gold market, did back in April 11 here. I'm checking the weekly. The daily. The daily looks better, right? Looks better too, just a little bit higher than the previous all-time high. Now, this one here is the current contract, which is the June contract, and this is the ES, right? The non-adjusted ES here. Just notice how many gaps do we have here, right? Three gaps, 1, 2, 3 gaps in this rally, in the current rally. How the sale, or not the selling, how the buying is coming from, it was bought from the 100, right? We cannot see the 200 here because this is only a 3-month contract, and that's what we have here. The 200 is way back down here, and the pullback that this market has was very mechanical, and it didn't reach. It was somewhere a little bit higher than 6% here. Now, in hindsight, we can say, well, because this was just a pullback, shaking off some of the late laggard longs from this period here, from this rally. Now, the thing of this rally, the rally that we are having now is, each time, and this, I hope you have noticed this too. Each time the market got long, the market came back, the market had a pullback, shook off the weak longs, so at least some of the long inventory. It doesn't has an impact on how the risk how this market has been trading. It's very mechanical, carried by short-term trading, basically. Right? One particular characteristic of short-term trading is that they are not short-term trading. Have a tendency, not to hold the positions when the market moves against them. Right? But right now, we have an all-time high. Yeah. One of the things that momentum has is the momentum can take markets to extremes. Be aware of that. I'm not going to short the market just because the market is too high or because it's time to short. That's not a good reason. The fact that I don't like the rally doesn't mean I'm going to be short. But it's just now I need to have something. Now checking the other markets, pretty much all of them are doing the same. Nasdaq stopped like 5 points from making a new high. The Dow is close to making new highs as well. Now another thing here is I was checking. Oh, come on. Checking the volume here. We have tremendous amount of volume, but I was also checking the volume. I decided to ignore this huge increase in volume. Right? It's a really impressive increase in volume that this market has. This was personal. This was very personal decision because what I thought is, this meme frenzy that is coming back. I was checking yesterday, for example, the volume that there is GameStop and all that meme stocks had. It was over pretty, I believe, some close to maybe 800 million, something like that, right, on volume. The New York Stock Exchange, this is a New York Stock Exchange, an IC composite, right? This is an IC composite that I have here. The volume here in that exchange was around 1 billion, something like that, right? And the volume that these few stocks had was significant. This is a composite, right? It has a significant impact on these charts here. And that's the reason why I decided to ignore. I may be wrong, I may be right. But I have just decided to do that. And based on that, I did a couple trades. I did a couple trades yesterday. Yeah, and they didn't work, unfortunately. One was I I got something here. At the time, there were multiple time frames references here, and I consider this area as a go no go level, basically here, right? This area here. And the trade was working, but for downside continuation, the first thing the market needs to do is close this distribution. My out was this high, right? As soon as the market came back and get closer to this high, I was out. Now, the trade didn't work, or my trade didn't work, right? I was trading, I was placing. My bet was that this market was just too long here. Some rebalancing may happen in this area. I was not aiming coming back down to here, right? But maybe closing this distribution and some rotation here, right? Also because I consider this to be too early in the morning. Um, Later, as the day progressed, I've noticed the pattern was repeating, right? What we have here, what we have in these days as well. There's a couple of days here too. Is the shake off of this? It was a shake off of the long week inventory that happened. That was uh, the market just got too long here at one moment, and I need to break before it can rally further. Now, when we have a trending day, it was a trending day. This happens quite often too, right? We have these pullbacks. Shorts traders get emotional here. They were shorting all day long, and I said, finally I figured out the market, right? Finally I got the market, right? And what happens is at the end the market closes at highs, right? Um, I didn't consider this spike yesterday, right? Uh, I did consider this one to be a spike yesterday. I mean, a couple days, the day before, but because it has something to be uh, that is that is the market is spike from, right? In this case, there is a 2-day range, and the base of the spike could be either here, right? It could be either here, or this one, because we have multiple periods here. The market was breaking here and attempting a rally here, right? And the rally that took this one started here, and the increases, and the spike starts here for me, right? This is a personal choice as well, and because this is a close of the distribution as well, that's why I decided to to name the spike, to place this as a spike. Inventory got super long here, and there is some rebalancing now, right? Some rebalancing that is happening. But notice what happened here, right? There's some liquidation. I didn't see how this period play. Let's call the charts again and see how. The last period. What is the last period? Oh, my bad. This one. What is 1530 here? No, it has a rally, it's really higher, pull back 10 minutes before the closing and closes at the high, right? It closes at the high. And then, yeah, this is the close here. This is the last period here. This is the last period. Closes above this high here, and there is some liquidation that happening in the aftermarket, after hours here. Right, this liquidation here, and then we have what followed that short cover, right? Short cover, the same kind of activity. After the fact is kind of, everybody is a genius after the fact. Because it's some short cover going on, and where this market is being bought, right? They are attempting to rally, to hold the market right at the high here. The next thing, they start buying from high back here. You can see the activity of the traders here, right? There's a play here. This spike may have removed some of the longs, some of the shorts. The market is supposed to open inside, inside previous range. We have now another prominent POC that is right at the highs, and another all-time high that's made in the overnight. No, I'm going to call it just all-time high here. Because it's blue, I know it was made in the overnight. This is the all-time high, the regular trading hours here. The guidelines are the same. Now, having this kind of highs, there's another kind of participant, something that I was checking here too, is by watching this movement here, right? What happened here? Can this be a potential range here? Or I mean a bigger one. Right? A bigger range here. Something like this. That's what I have here. That's what I'm looking towards here. Potential range maybe there or maybe here. Right? I'm using balance guidelines here, right up here, right now, at the opening. Right? Go with the breakout of balance, fade a balance that fails. But this is a bigger time frame. Which requires if we have to be patient before, now we have to be even more patient, right? We have to gather more. The market is one time frame higher in the daily time frame, in the weekly time frame, and it's still early in the month. We are just halfway through to call it one time frame higher. To call it a one time frame higher as a resume. This may be a range. This could be very well be a range here. Anything can happen here. If I check, let's check the Nasdaq here. Nasdaq has a 4-month range. Same thing. The advance that Nasdaq has, or the advance that this market has in 3 months, now that has been recovering only one. Right? Pay attention to that. Right? 3 months here, 4 months here, and 1 month. The recovery happens in 1 month. This happened really fast here. That's something that is catching my attention too. This is really fast. That's how much time it took the market to come back up here, and how fast it has recovered here. The other end is extremely. This is what happens when we have ranges. Right? We have ranges. These ranges are stair steps, right? there's another range here. When the markets have these kind of ranges, when either moving lower or moving higher, breaking or rallying, this is going to be support or resistance, right? At the time we were talking that this market was trying to get back to trying to get to the opposite side of this range, it failed. It tried multiple times here. It tried 3 times here. It was bought from the high of that range, and it tried like 1, 2, 3, 4, 5, 6, 7, 8, 9 times, and failed. Had no success. All of the short, the market was too short. Now the shorts have been removed, right? Shorts have been squeezed out, or have been squeezed out of these markets now. The bond market is having that pattern too. Can you see? We have a range here. Have another range here that looks like short covering, but it's having an upside, a breakout to the upside here. Yeah? That's happening here. It's opening to the downside. It opened with a gap. No, it opened inside. Right at the high. Check the high. And it's coming back inside. It's coming back inside this range, right? Whenever that happens, notice that what we have here, inventory is very low. This can be a counteraction. When that happens, the opposite side of the range becomes, and I start to watch the opposite side of the range. And there is this short, looks like short covering is coming from another short covering day as well, back to back, right? So that's to have in consideration, to not fall, to be very careful and not fall for price, right? Not just be a price follower here. All right, the market's open. I don't have too much time here. I don't have. I think I'm going to be not so long in the stream today. I think there might be some opportunities here today as well. Notice where the market opened and what the market is doing right now. All this inventory is long. Right? Most of the inventory has been rebalanced now. We have a good number in the weekly jobs claims. This is an inside opening, right? We have a trend day, very, very I wouldn't say emotional, but having 4 distributions are signs of emotional trade. 4 more here. I'm going to miss the trade. I have to be long. Very close to this all-time high here. Nasdaq, just check. Nasdaq wasn't 5 points from. It was just 1 point. Well, check it out. 1 point for this to take it from making a new high. And the high the all-time high was a non-excess high. So that high is exponentially low. Now, what happened is now we have overnight inventory is long. Look at this opening here. Volume is decreasing here. Almost as how it used to be. got to be very careful here with this kind of custom markets, with the contest that we have here, because the all-time high, uh, even though I consider the underlying structure to be very weak, I think that this market has potential, still has more potential to the upside right now as of 9:33. And the reason is because we have that very prominent POC, overnight inventory being long, and a new high made in the overnight. When markets have lower volume, it's not hard. It is not hard to keep the rally. If you have any questions, please just let me know. I'm not looking to short this market. Not right now, at least. I want to see what the market does, how the market reacts to this new all-time high. This was the previous all-time high. This can be used as a support now. Now, in the short term, any break actually that happens here is good for the rally, right? It will fit the pattern that this market was having previously, right? Removing some of the weak, low inventory, and as long as the market maybe doesn't take, I will take this as my reference in the lower side. This area here, which is the two-day range here. Notice that this doesn't have any excess here, and it comes from a short covering day, right? Short covering day, and we have two-day range breakout to the upside. This is my first thing, right? Holding this level and building value above this area, and it keeps the rally intact here. Now coming back inside here, closing the gap first, coming back inside the and closing this distribution, in that order. It risks, some serious downside here, another rebalancing. But I'm not going to upfront anything here, right? I think the market's too long, and the market has gone too far, too fast. But good luck trying to catch high here. I just don't do that. Right? What the market is doing is the first thing I need to understand. Right? The market is one time frame higher. It may be a weak movement, but that's what it's doing right now. We have a new all-time highs, new kind of strategies just are triggered when that happens. I'm just waiting here. It's really hard for traders, to have patience. Just have patience here and watch. I have one trade yesterday, and I lost. Right? It was a miss. I missed the trade. It was negative. Right? Those are lessons that I learned the hard way. Jim told us, or told me, or told his students the same thing over and over. Right? Don't fight momentum. But of course, I know better. Right? I am a better trader than him, and of course, I'm going to teach the market a lesson because I am very smart. That's the easy way to get humble. Now, notice what the Nasdaq has done now. Yeah? It has. I was checking from Nasdaq yesterday. There's this very mechanical high here. I mean mechanical low here. No? It took these lows out. Now they come back. They come back and buy from the same level here. Same level here. And now today, the same thing is happening. Right? Same thing is happening. I am going to keep this reference here. Remember, this whatever I do is just personal choice, and I suggest you to do the same too. If you want to learn how to trade, unfortunately, that's something that I cannot teach. I cannot be teach. You have to learn how to trade because trading is a very competitive activity and very, very counterintuitive. Because what you trade here is, the market you trade also is yourself. I cannot tell you, you buy here, sell here, buy here, sell here. Once it has happened, okay, it's easy. Okay, this is bad. I'm going to sell here, right? And everybody can do that. Everybody can do that. We have a chart, I can sell here, I can tell you, sell here and buy here. But that's not how trading is, That's just a fallacy that, that most people falls for, Streamers that sell that, And traders are just regular people, right? Looking for a way to make money, to replace income, or to earn easy money is what attracts people to this business. With the false belief that this is easy. This is not easy. If you think trading is easy, well, get ready for a hard wake-up call here. It's not easy. Trading is one of the hardest, one of the most competitive activities that you will find out there. Now, the Nasdaq is weak in the high. We have weakness in the all-time high. This is exponentially weak. We have a very prominent POC as well. And now the ES had the same thing. Right? The ES has exactly the same thing. What's happening in the other indices? Let me take a quick look, for example, to the Dow. The Dow. The Dow's a different market now. What's happening with the bond market? No, the bond market is breaking here. That may hold any advance we may have here if the break continues. Remember, I'll be talking in the morning about that market. It looked above and now has come back inside previous day range. But also, it doesn't have the same relevance or the same weight as it had like a couple of weeks ago when the bond market was at the lows, right? Now it has recovery. It has some recovery. And also we are in this period, right, when earnings are almost done. What is left? We have Nvidia here. Let me check when Nvidia is the last one. I guess that is also something that may be holding this market. And it has been peculiar because Nvidia is the last one, and has not been put together with Apple, Google, Amazon, and Microsoft, for example, right? Netflix, Meta, and Tesla. But in the same week, right, or on or the following week after one or another one. It is what I see here is we have a earnings call on May 22nd. I guess that's next week. When is that? Next 22nd would be Wednesday. Next Wednesday. The last one we had it was let me check. April 24th was Microsoft. April 30th was Amazon. I guess that was the latest one. Yeah, 30 was Amazon the last. It's kind of like 3 weeks after these companies. Now, opening inside previous day range increases the odds of rotation, increases the odds of chop and rotation. The closer the market is to the center of the previous day range, the higher the odds of chop and rotation. Now, balance guidelines apply here. The market is in balance relative. Do you remember that huge range, that potential huge range that these indices may develop? The VIX must be super low now. $12. Holy moly. 12. That's less than 13. Gosh, there is a lot of complexions here. I think the risk is high actually, but it's not being reflected by the VIX. A couple of days ago, I was really close to get to buy some puts, some spike puts. I didn't do it because I saw the potential this market to making new highs. The opening of the week. At the opening, this market tried to sell, right? But it was met with buying. The buying that came was stronger, but I had my doubts. I had to say that. I say that again. I had serious doubts that this market was going to make new highs this week because of the way how it was trading. Very mechanical, very short-term trading. And guess what? The week is not even over. And we have a new highs, right? We just don't know. That's how this business is. We don't know what's going to happen. We may have some biases here, but have no idea what's going to happen. Yesterday, almost all market generated information was pointing to the upside. We also talk how odds increases when multiple time frames have the same reference, right? Or they come to a point where they are close to some specific reference. That's what I call this. That's what we call these go no go levels, right? The market either stops there and is rejected, or that reference, that go no go level is taken, and then we continue the direction of the movement. In this case, the rally that we are having. I have in place. I don't have anything here. I don't have anything. Anything low. We are almost 950. Look at what this volume is. Just check this out. Right? we have only about 10 more minutes, so another half would be somewhere around here. That's even lower. Let's check this day. About as low as this low this day. This is just unbelievable, man. I expect maybe a little bit more than this, but it's going to be far below than yesterday. But I decided to ignore these 2 days. I think that this meme stock fancy craziness has had an impact on these charts. Buying coming basically from seller and selling from all-time highs. Right? That high is not good. The Nasdaq also has a high that was made in, was an overnight high here. All-time high up here. No, right? It's exponentially weak high here. This high is no good too. The volume in the ES has been very low relative to previous days, previous weeks. Break out of balance here in this market. Now a strong market, and this is the same thing that happened yesterday too. A a strong market just doesn't stop here, right? Doesn't come back. How many times has it come back? You know, it just doesn't do this. This is something I am observing over and over. Right? It happened here. Where it happened? Here. I don't remember exactly. But there is no signs of strength here in this market. And that's why I'm being very careful here. Very careful. Whatever position I take. You know, as soon as I got something that I just tighten my stops. I don't let it run. So I try to, if I see potential for some kind of developed trade, I don't have too much patience. I don't have too much patience for with this kind in this kind of environments. Now there's a little taper here, really nice taper, huh? How many times this movement tried to, you know, had a breakout of this layer and tried to have upside extension. It came back and went back up higher, came back and higher, came back and higher, right? This market, the index, the Nasdaq, is completely different. It's very, very nuances. The behavior of this market is another thing, right, than the US. It's way different. It is more technical. It has more short-term trading going on in that market. It also requires, this is just personal, right? You need to have or to keep more room to your trade here. Your stops are wider there, and that also is the risky part of that market there. Nice shake off here. We have a new high, right? And how many new highs these markets have made? Let's check Nasdaq. I'm going to check Nasdaq for example. Nasdaq this year has made 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 new highs now. 14. And we are just May. We are not even halfway through the year. It has taken, you know, just pay attention to that market, to Nasdaq. It has taken again the all-time high, has taken back. I mean, it has taken the way how it traded this time. It was different. It was different than the previous ones, right? Kind of like it has some. It seemed like it had some strength, right? The market was moving like boom, 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 boom. Rather than grinding, this has these sharp increases, right? But it just dies up there right now. Now, and this market, the ES, you know, you got to be more patient here. You really need to have patience here. At one point in time, I got his friend who was showing me his trades in Nasdaq. And he sent me, at once he sent me a couple of videos or clips of his trades, and he was trading, and it looked like a video game. it was entertaining because you know how this sounds, right? Like ping, 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 ping. You know, buying, selling, buying. But they have just one, like ping, 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 just like a slot machine like this casino, the coin machines that you have, like you know, when you pull the lever, you have this sounds like pling, 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 pling. You know, you open a trade and close the next before the next second is over. It's already closed, right? It was fun to watch, but you know, I don't know how long can you last doing that, right? That kind of trading. And I think most of short-term trades that do Nasdaq are just like that, just like him, or trade like just like that. One of the hardest things to do here is to be honest. To be honest with yourself. It doesn't matter what you say to other people, but you have to be honest with yourself. And when you are honest with yourself, you will also will be honest with other people. Right? It is just natural. I have yet have to meet some unsuccessful traders. All the traders that I have now or met, all of them are successful, you know, because they show, you know, big trades. I had made 60 points today, 80 points today, you know. This is I mean, statistically, it's just not possible. That's unreal. It cannot be, right? Because statistics don't lie, right? Just 95% of trades fail. But everybody posts, right? Everybody's posting great gains. You know, have these screenshots that are making $500, $2,000 in one day. Maybe you got those. You may have those wins, right? But they don't show the losses. You may win 2,000 one day, and the next day you lose 4,000. So what's business then? Right? And we have to approach this job as a business, because this is a business, and the business is you. If you don't know what the business is, then more likely you are the business. And that's how it is here. That's well, at least for us, short-term traders, because we don't have the power to stay here in this market, right? The power to buy or sell something here and sold and hold for 1 day, 1 week, 3 weeks, times like that, right? We mostly, our trades, you know, don't last that much. Are based on our strategy. Most of the strategies are based in very short time frame, very short time frame trades. All right. There's a breakout of balance in the Nasdaq. You know, there's no excess at the high. I would say the Dow also had a breakout, but has come back inside the range. Oh, and relative to yesterday, the movement is having upside continuation. Huh? We have K, A, L, M here. This is a pullback. Now, as long as I would consider this level here, there's a couple ticks below previous all-time high. If this low, this late pullback low is taking, as long as this remains, the movement is still alive. Right? Momentum still to the upside. If it comes back and takes this, then we may see some rebalancing here. Now, how many trades have you taken now? How many times have you been long? How many times have you been short? This is a valid trade here. Because you have good location here. Location, once you, maybe if you are looking for a trade that's not good, but this is this can be an opportunity, because you have good location. The market doesn't have to do much here to let you know what, if I am long here, right here, the market doesn't need to move too much to let me know, you're wrong, right? Same thing goes here. You have one long here, if there's a breakout here and this get long, the market doesn't have to boom too much to let me know, for me to know that I am wrong, my trade's not working. Look at the weakness of this movement, right? Let's check where this low is. The nuances in Nasdaq are different. Okay? This is right at the low of this distribution here. Right at the low. 3, I would consider now 4 white. Low. Very, very, very risky here. Now, where the next thing is happening, next period is pretty much from hard back, right? So there's no change. The same kind of trading that was going on, it still remains. Volume was even lower. How much is this? Like 30% lower? Something like that? Let me check. $33.62%. It's quite higher. It's a lot lower than previous day. Alright guys, it is 10:05. I will be in Discord. I will be posting there. Okay, this low has been corrected. This market is trying to find support somewhere here. Look at where this market is buying here. Very narrow range here. Right? Good things, good opportunities can come out of these very narrow ranges. Let's see if this remains and C may come here. Let's see. All right, unless you have any questions, I'm going to be calling it a day. If you have any further questions, just please use Discord or Twitter just to send a direct message to each as well. All right. I wish you guys a good rest of the day. Stay safe. See you.